Hi guys, thanks for tuning in to another episode of Nuggets News. We are back with Kyle, one of our traders who's been doing really well this cycle. But we want to talk about the market structure of Bitcoin, the other majors. We're going to talk about gold and silver, the stock market, what's going to happen with interest rates, and try and tie that all together for you. But Kyle, how have you been seeing things in general lately, mate?
Mate, I'm a lot more bullish than I think most people. I'm actually running a webinar on Thursday night about this because a lot of people are saying, hey, the market cycle top is going to be on November this year, November, December, because that perfectly times up with the last 4 year cycles that we've always had. But I think people are massively discounting how much the ecosystem has changed because of the massive amounts of institutional adoption. And I really think that we're syncing up a lot more. We've talked about this many times over the last couple of years. We're syncing up a lot more with the macroeconomic cycle. I think that matters so much more than what the halving matters this cycle. And I think also people are completely discounting the fact that every halving, the halving becomes 50% less important as well.
Yeah.
Because obviously we're distributing the effect of miners losing that selling pressure is becoming more and more minimal. I just think that we're more likely to see an extended cycle this cycle. I know a lot of people go, oh, super cycle and everything like that. But I mean, we didn't have, 128 different Bitcoin treasury companies coming out and trying to accumulate. I think we need to watch the data on what those businesses are doing much more closely than like just saying an arbitrary, hey, it's 525 days since the halving. So that means we have to top because that's
Yep.
what happened 4 years ago.
Yeah, no, I tend to agree with all that. And again, it's kind of a tale of two markets, whereas it's like what's retail doing has become less and less important each cycle versus, as you say, what treasury companies and countries are doing, that type of thing. And so the metrics that we're looking at as that comes in are different as well for traders and that type of thing. But I think for the wealthy people, it's about, well, how do you protect your wealth with everything that's happening around the world now? And more people are sort of distrusting banks and distrusting their government. They want something outside the system, and so that's why we're going to have a look at the gold chart as well as Bitcoin and that. But I guess all these things come into play with the way the world's heading.
Yeah. And I honestly think that we probably won't have a big collapse like what we had in 2022 in the Bitcoin market until we have a market wide collapse. And people are selling their Bitcoin because they need capital to cover their other positions that are in trouble, which is exactly why we topped in 2021 and 2022 bear market, was because the entire stock market was going through a bear market. It wasn't just crypto going through a bear market while stocks were pumping higher. Like everything was in a bear market. So
Yeah.
I can't really see a bear market coming for stocks in 2026. I don't know. Are you seeing any signs of that? They don't usually happen that fast. You don't usually have like the last time we had a bear market was 2008. And then we had the COVID bear market after that pump, which was 2022. That's 14 years. People expecting 14 years bull run, and the cycle is usually 8 years in traditional markets, 8 to 14 years. We had a 14-year cycle, and now it's like 2 years later. They're like, "Oh, we're going to have another bear market again." It just doesn't
I
add up for
mean,
me.
two things I'd say to those 2 points is I think we could maybe have a blow off top for Bitcoin that if the treasury companies do what retail did in past cycles and they start to, we have insane amount of treasuries coming online as prices going parabolic and they start to, borrow money to do it and do it on leverage and whatever. And they start treasuries and then price falls 30% and they start to get liquidated just as they're getting set up. So that could be something that actually does cause a deeper correction, but that would depend on how steep that curve is when all the treasury companies rush in.
I agree. That's definitely one of the main things I'm watching for, 100%. I think that it's going to take time for them to build up. I feel like it's going to take 12 months because they're just getting started now. I don't think that will happen in 6 months' time. Or, I mean, like, it's already August. So, like, we're sort of, for it to top in November, it's like that whole cycle of euphoria and the treasury companies burning themselves. I think it's too tight of a timeline. I feel like that's more likely to happen at the end of 2026 where they all think they're invincible because they're like, look at the last 12 months of earnings and this strategy works so well. Let's triple, double down on it. And that's when they're going to get burnt. So I feel like we just need more time for that to play out.
And the same with the stock market. I guess it's almost like it doesn't really matter what stocks are doing now. If you're talking about a bear market, and I think we can have a recession or even a depression as retail, we're going to get into some of these jobs numbers, but AI is going to replace jobs. And we can just see, that bottom class and middle class get smashed, but stocks can still be going up. This is something I've been talking to Martin about for years now, saying, Martin, just because all these traditional metrics suggest that stocks are overvalued, they in themselves are relatively finite compared to the more money we're printing and where else do the wealthy park their money kind of thing. So, yeah, there's no reason I don't see why stocks can't keep going up if Trump, we're talking about the US stock market, which everyone focuses on while Trump keeps trying to make all these pro-US policies. But really, if they're just enriching the rich and stockholders, it's not necessarily a good thing, or it doesn't mean we can't be in a big, nasty recession depression for
And if
most
they're
people.
replacing wages with AI, which is, practically free or cost energy, that means that their earnings per share is going to increase. If you think the earnings per share is going to continue to increase because more and more adoption of AI, that should only mean that stocks continue to go up.
Yeah, it's a crazy, crazy world.
Unless there's some housing market crash because no one has a job anymore and everyone starts defaulting on their loans. But I mean, that's we'll start to see the evidence of that start to pop up. And I always try and say I don't try and predict what's going to happen too far in the future until I start to actually see the evidence of that popping up. Like, I want to be aware of all the different possibilities that could play out. And there's like, okay, we're starting to get data and evidence say, hey, this could be happening. Now we can pay attention to that and give it some credence and start to take action on what's coming through. This saying the evidence is pointing towards that's a probability that could play out now, rather than, because I feel like a lot of people, they get scared and they're like, oh, well, there might be a housing crash in 2026. So then I'm not going to buy Bitcoin today. I'm going to sell my Bitcoin today. It's just like, but what happens if there's not? What happens if that happens in 2028 or something like that? And you miss out on all those gains. That's like, the Robert Kiyosaki's, which is saying every single year that we're going to have the biggest stock market crash in history. And,
Yeah, I know what you mean. All right, let's, if you want to share your screen and dive into some charts. I mean,
awesome.
The other thing for Australian properties we've been talking about, if the civil unrest really starts to pick up and all the division and they start to, get everyone fighting, does that really start to force an exodus of people out of these big cities? And we saw maybe the biggest protest ever yesterday in Sydney. So, yeah, all these things I'm sort of waiting to see how that plays out. And does the public react, and does it boil over, or are people kind of not giving the government, because the government want the excuse to bring in digital ID and all this surveillance, and so they love if all these peaceful protests turn into mass riots and clashes and more laws they can bring in. So that's all the stuff I'm keeping a close eye on here in Australia for our economy and property market.
We need to protect you with more laws and more surveillance and more tracking.
Yeah.
100%. I was watching a really interesting video talking about how the Canadian, it was another economy as well, how it was Canada and New Zealand, both their property markets are down about 20% at the moment. And, Australia is only about 12 to 18 months behind those countries, following the same playbook, mass immigration to try and prop up the housing market and blah, blah, blah. But then you can't do that forever. Eventually you run out of cans to kick down the road and it catches up when you're not expanding the economy. And, I think what is it now? 50% of all people in Australia are earning their income directly from the government. And all the jobs that are being created are either through government, through NDIS. There's no private sector actual job growth at the moment.
Yeah, no, exactly. That was the stat I saw today. I think it was all of last year, there was only 50,000 jobs created in the private sector. And you've got to remember, we imported, nearly 1 million people over the past 18 months or whatever.
Insane. Yeah. How do you have 50,000 jobs created with 1 million new people?
And they're all on that. Well, the rest of them, they're all on government welfare. It's just wild. But
that's why they're increasing our taxes, which then squeezes the economy even more, and people have less money to spend on things. So you have even less private sector growth, right?
Yes.
So my sort of theory is, and I've been thinking, I'm hoping that this has played out for a long time, that, the US economy, because of everything Trump's doing and stuff like that, that booms, which takes Bitcoin with it because they're printing so much money. And Australia finally has its 2008 style US housing market crash in Australia. And Bitcoin's taking off and flying while the Australian economy has a full reset. And maybe people our age might finally be able to buy a freaking house.
Yeah, that'd be nice. I think it's still wishful thinking, because I think any meaningful pullback now, there's just too many wealthy people that would come in and scoop up these houses once we get a 10-20% pullback, and then And the average younger person that was been saving has probably lost their job at that point, or one of the two partners has, or whatever. So yeah, BlackRock or the wealthy will come in and scoop up these assets, I think, no matter what. But yeah,
That's the painful part, isn't it?
all right. Where do you
Jump
want to start,
in.
mate? You got some slides for us?
Yeah, let's pull them up. Can you see my screen now?
Yeah, perfect.
Well, we're talking about gold, right? And how it's a hedge against everything collapsing. And, we were talking about the jobs report that came out. We'll go and have a quick look at that in a second. But this is actually quite a nice, strong, bullish setup at the moment on gold with, basically quadruple top. I saw Mike Novogratz talking about quadruple tops because I think it was Phil Cologne, who is, a notorious scammer from 2017, bit of a fake TA guy, was talking about the quadruple top on Ethereum. And Michael Saylor said, not Michael Saylor, Mike Novogratz came out and said, I've never seen a quadruple top play out before in history. It just always has a little bit of a pullback and then blast through. So let's keep our eyes on gold anyway. Obviously, the resistance is that psychological level is 3,500, and that's a previous all-time high. But this is quite a strong bullish structure. We have come inside our value area, so I'd like to see it break back out of this. And then the key is obviously breaking above pretty much 3,440. And once it gets above that, usually you see structure like this. If it can clear this level, it should take off. And if we want to look at targets and stuff like that, we'll just do our fib pull. The first one would be pretty much 3,800, and then we're looking for a push up to about 4,000 on gold if it can break out of that structure. But it looks really strong. It's not testing its trend line all the way from February last year either, so still a lot of room for this to continue to play bullish at the moment.
And silver as well is another fan favorite that's finally caught up in the past couple of months and had a break out of that long-term 35, I think it was 34 resistance.
Yeah, 100%. I'll try and get one that's got volume on it. This one doesn't want to try this one. A little bit more bullish because we could see that gold was still inside this value area, whereas silver is outside of that. So we call that in markup phase. And a lot of time what happens when you have a strong breakout like this, it'll come back and test this and bounce off. And it looks like it's trying to put in this higher low through there at the moment as well. So this might end up sort of copying gold's pattern because typically it's a little bit behind gold and would end up doing something like that over the next few months and then push again. So, I mean, I know you're sort of in the silver camp, but I've never really been a super big believer in silver. But what's your theory on this playing out over the next
I think there's some US states, don't quote me, it might have been Texas, that are already reintroducing bills to monetize silver as official tender. So you've got that monetary aspect as a play as well, with just the technology and the power needs and devices needs in AI, like all these industrial metals, I think do well for continuing this exponential growth of tech and that type of thing.
I mean, it's been doing well for a while now. I'm trying to get up a chart with longer timeline, but I can't get anything back past 2016. But silver had a lot of price action history, and it ran all the way to $55 or something. I'm pretty sure. I can't.
Yeah, it might be the SLV ETF might have more, but yeah, it was the Hunt brothers cornered the market back in the 80s, I think it was, when they recognized that central banks were launching these contracts and things that were sort of IOUs, so they actually wanted to corner the physical market. But yeah, it's one of the few assets that hasn't broken its record highs since 50 years, 40 years. How many assets haven't made a new all-time high in 40 years?
Well, I mean, on this chart it did just slightly, but then rejected straight away, which is funny because that was pretty much when gold peaked at the end of the the global financial crisis was this point here, but it was the money printing afterwards, the bailout of the banks and all that sort of stuff that created this massive pump. And that was led by gold and silver, which got it back to all-time highs. But yeah, it came all the way back down to, $11 or something like that in the COVID crash. So yeah, I was trading silver a lot through here, but I've still got some price action markers on the chart. But I haven't been concentrating on it that much because it's been through this massive sideways range since the last 4 years. But it's good to see it starting to get back out. And let's see if it can reclaim that $50 mark. I'd love to see silver get a bit of action. But I mean, gold's really been leading the way.
Nice. Well, let's push on to get through Bitcoin, ETH, maybe XRP, some of the majors.
Yeah, so with BTC at the moment, this trend line I've got coming through here, that's the main thing that I'm watching at the moment, because I'll just zoom out a little bit so you guys can see. So yeah, this point here, and I like to connect the 4-hour, the candle closes. That's why there's a little bit on the bottom there. I seem to find that matches up more closely with the next touch point. But yeah, I want to see this trend line here hold. And I think we're bullish once we get back above this range low that we're in for about 2 weeks. So once we can reclaim pretty much 115K, it's like 115,600. Once we can reclaim that, that's a reclaim of this 2-week range, and that'll make us look a lot stronger. To get back above this level through here, that's pretty much 120. Once we can get above that, which is also a TD9, which is one of the Wall Street favorites indicator systems. I like to use that one. So we put the 9 in here. And the signal is once you get a candle close above the wick of that 9 candle, that's when it's signaling continuation. You can see how perfectly this has worked out in this range. Since we put that 9 candle in, we haven't had one single close above that level. So that level is pretty much 120K, right? So it matches up perfectly with the psychological level as well for Confluence. But basically, the rule is once we get above 120, then we should see continuation. And I'll be looking for 137 as the next target, because that's the macro fib level of the 2.272. And if we fail to hold this trend line through here, then obviously that's when I start to think, okay, we're probably flipping a fair bit more bearish here, and probably need to consider the seasonality, which is we've never actually had a green August and September in 1 year. It's always been red August and green September, or the other way around, right? So I think for members to understand that there's most likely a red month coming in soon. If it's not going to be a red August, very likely we have a red September. Obviously, just because something happened in the past doesn't mean it has to happen this time. Things obviously always change, and it could be the first time we ever have a green August and September, but I don't like to bet against the probabilities. And the reason why that happens is because at the moment, everyone in Europe and everyone in America mainly are on holidays. And they come back from their holidays at the end of August. They push the market down in September. They reload their positions. That's why we usually find a bottom towards the end of September or somewhere. And then we make the higher low mid-October. Then the market pops off after that. So I'm very aware of that. We could end up breaking this trend line, having a bit of a downtrend sideways market, come back, retest, the developing VWAP or something like that around 100K. And then we reset and we have that higher low gets put in towards mid-October. And then it's usually that around October 20th that we really see the market start to take off. So that's, gun to my head, that's what I would say is probably more likely to happen. We have a short-term correction through here if we break this, but you can't rule out Michael Saylor and all these treasury companies who are just buying like crazy. Maybe that typical part of the cycle of the year doesn't play out like it typically would, because there's so much demand at the moment. I think the fallback on that would be once we reclaim this range low here, which is about 115, 116. If we can clear that, and then once really above 120, that's the full trigger. Hey, this thing's getting ready to really take off and run. If that happens, altcoins will take a big catch-up play as well, because they have oversold a lot. XRP is one of the ones that we were talking about. We want to have a look at. This actually looks really nice. It looks like a typical falling wedge structure. I want to see it hold pretty much 2.96. You could just say hold 3, right? $3 there. If you can hold that, that's the developing value area high. Above that gray box there is telling us the market's bullish. If we fail to hold that, then the next level is 2.54. If we can hold that, that's the VWAP. And I want to see a bounce off that and then break this level here, and then we could be off into markup again, right? So that's the typical thing that I'm looking at for something like this to play out. If it can play out this falling wedge and we break this downtrend here, then the target would be 3.5. Clear that, obviously, then we're off to test our macro fib levels. I think eventually this is probably going to make its way up to 5, etc. But it's been going sideways for a long time now, pretty much since November, right? We've been in this range, just hanging around that $3 mark since November. So it's definitely building up, and I think XRP is going to eventually have a mega pump at some point in the cycle. Now it's gotten rid of all the SEC overhang and everything like that, and they're pivoting to stable coins as well, like which Ethereum's doing. And scams pump the hardest is the old adage in crypto, and everyone says XRP is a scam for a reason. That's because the founders are constantly dumping. I think it was just recently that one of the founders dumped, was it 900 million or was it $9 billion? It can't have been 9 billion. It must be 900 million.
Yeah, I think it was 200 million maybe. But yeah, I mean, again, it's got such a cult following, and there are a lot of banks that are starting to talk about this ISO compliant tech. And so, like I said, I've been keeping an open mind to it, and it's been one of the best performers this cycle. And so, well done to people that kept buying it 20 cents, 30 cents the past few years.
100%. I think it's going to have a really big pump, but for me, XRP, I think it's going to pump really hard and then have just as an aggressive pullback. So for me, it's one of those coins that I just use it to create more Bitcoin in my portfolio. So have a bunch of it now. When it finally gets its mega pump during the alt season phase, I'm rotating back out of that back into BTC and locking in that BTC. Because for something like this, I feel like I don't know what's going to happen to it, whereas I'm more comfortable holding that BTC long term. Because if we zoom out, XRP loves to pump and then have really aggressive pullbacks. So I just don't want to get caught in another one of those. SUI is a really good one. Really nice at the moment, bounce off our developing yearly VWAP. So when I was talking about XRP before, coming down and testing that, I think it was 2.5 level. I would like to see some sort of a reaction like this. And if this level can hold, we're looking for a rotation back to $4. If that can finally break, then we're looking for a markup, which is similar to what happened last year when we finally broke out. So you can see once you get above that value area and it can hold that, this is the sort of price action that sort of follows. So we get that big aggressive pump moves to the upside. And I think that's coming. I just think that BTC needs to move up a little bit more aggressively. And I'd like to see Ethereum continue to outperform as well, which might be hard. I think we're moving into the phase. We'll just bring up the ETH BTC chart. I think we're moving into the phase of the market where Ethereum and Bitcoin are both moving and performing well, but Ethereum is slowly taking ground on Bitcoin. So I'm looking for this to go sideways here again and maybe put in some sort of price action like what we had back here, this sideways range, and then for it to continue to chop here and then push, and hopefully Ethereum can make it back up to this downtrend line that we had for about 2 years through here. But, I feel like we're sort of in this phase of the market, maybe a little bit more here now of the market for Ethereum. So I think there'll be a bit of a battle between which coin is leading for a little while. And then I think Ethereum will take off finally and have its big pump, which is basically this move here. But I think it's probably a little bit further out than most people expecting. Like a lot of people thinking now, Ethereum's just going to take over the show now, and Bitcoin dominance is just going to bleed out from this point onwards. But I actually think that we still probably have a little bit of time before that plays out. And maybe we're going to get an alt season November, December, or something like that this year. And we might not get the major alt season until sometime in 2026 if we do have that extended cycle start to play out. But I could see this chop around here for a little bit, and maybe Bitcoin takes over the show for a little while, and then we finally break this trend line. And that's when we have the big dump off. So we get some sort of price action similar to this. But this is definitely the trend line through here. Once we break that, that could be a really big signal, similar to what we had. Like this was the alt season pump back here. And this is when Ethereum really pushed really aggressively against BTC. Yeah. I think that's a key trade that most people want to try and make, rotating their BTC into Ethereum and capitalizing on that move, and then rotating through altcoins after that. Like anybody that's been in crypto for multiple cycles now, that's typically when you make vast majority of the gains any part of the cycle. So I did just run a webinar on this. I think it was last week or the week before. You guys can get that from my website or jump onto my Instagram page and comment the word alt on any of my posts, and we'll send it to you. You can watch the webinar. I explained my my system of how I multiply my BTC using this system of rotating through altcoins at the right time, then going back to Bitcoin, and it works really well. If you do focus on that over the years, you can. I turned one BTC into 70 in the last cycle, so even if
Nice.
you do a quarter of that, like you're probably going to do a lot better than most of the other traders out there. But just focusing on USDT gains. Yeah, you go.
I was going to say, just quickly before we wrap up, do you want to share any other slides or M2 money supply, the US job numbers, or anything else like macro that you think ties into everything we've spoken about?
Yeah, so I think a really important one to look at is FOMC, because at the end of the day, Fed liquidity drives everything, right? And I'll just pull this one up. This is the chart everyone's been talking about. The global M2. Bitcoin is starting to lag that a little bit, so maybe we do get a catch up and it starts to follow soon, or maybe the correlation breaks. But obviously, federal liquidity drives the market so much. It drives stocks, it drives BTC, probably more than it even drives the stock market. Because as we know, Bitcoin was created as a protest to that. But without getting deep into that, we have an 80% probability now that the Fed is going to cut on September 17th FOMC. And they probably would have cut in this last FOMC, which we just had a couple of days ago, if the numbers had have come out. And this is Hedge's post after the jobs numbers got released the other day, and he said, "Holy crap!" And the reason why I said that is because the miss of the May and June jobs numbers was so massive. It went from plus 144 jobs to down to just plus 19, and plus 147,000 down to just 14,000. So it's like more than a 90% miss in their calculations. Then they're revising it down, and that's why we had that big sell-off on the stock market on Thursday, Friday, right? We had this huge sell-off, which was only about a 3.5%, but that wiped out all of the July gains. The entire month was wiped out pretty much in one day because those job numbers came in so poor, and that's why Bitcoin had sort of broke down from its range as well, and there was that extra selling pressure. So, the big thing though is this 80%. If that ends up continuing to climb, and we start to see changes in the language. We did have 2 Fed members dissent as well and say, hey, we should be cutting the last meeting. I think that's going to increase, and there'll be more votes for a cut. And we'll probably get the first cut in September, and that will typically be a big boost to the psychology of the market. If we can start to get that shift from being a hawkish Fed back to a dovish Fed, that will support the marketplace a lot, because they start to flip from focusing on decreasing inflation. They start to focus on improving unemployment, right? So they start to boost unemployment, reduce unemployment, so boosting the employment numbers, and that eventually leads to QE. So the first thing they're going to do is start to lower interest rates, and then they start to add liquidity back into markets, because they had the last 2.5 years since mid 2022, they've actually removed $2.2 trillion from the economy. So they're going to start to put that money back into the economy, along with the spending packages. And, I think they're planning on bringing in from tariffs about $350 billion this year. They're on track to. I think just in the last month, they brought in about $29 billion from tariffs. And Trump has said that he might do bonuses to give out money to the population of the US. We all know what everyone did with that bonus checks that they got during COVID. A lot of people sent them straight to Coinbase, and they were buying Doge. Yeah. So, that could be a little boost to the crypto markets. If that eventually does happen, who knows? Can't plan on it, but it's a little fun thing we can see potentially coming down the track.
Yeah, funny you mention that. If AI keeps taking our jobs, we could be getting, this universal basic income, and then everyone's just sending it to Coinbase every month to get out of US dollars or something. Like, it's just wild to think what can be happening in the next 6, 12, 18 months around the world.
Well, yeah. Where do we end up? Where does the world end up if we don't have a UBI?
A lot of civil unrest and as I said, is it by design, where it's like food scarcity and all these things, like the cost of energy? These are all the things that people are trying to build wealth to get out of the system and protect their family and themselves from. It's the whole point of why we get into this space, I guess, isn't it? So
is this why they want everyone locked in their 15-minute cities, so that they can know if you're not going to a job, we need to know that you're staying inside your home, your little town that we've got you locked in, and a tracking device on your phone to make sure you're not getting up to something.
Well, that's the dystopian side of it. Hopefully, enough people wake up and we don't end up in that, or a lot of people are going to keep moving to other countries with better freedoms and stuff for the time being. But yeah, it's wild times. Right, I appreciate all that, Kyle. All the links to follow Kyle, do his course, his socials, everything down below in the description as always. But appreciate that, mate. We'll have to catch up again soon.
No worries. We do have a free webinar this Thursday night as well. I'll give you the link to throw that down the bottom, which is going to be talking about how to pick the cycle top. If people don't know, I managed to pick it within 2 days of the last cycle top being put in. I'm going to give you a breakdown on how I managed to do that and how people can use the same data and information to try and nail the cycle top this cycle. Because I think a lot of people are going to get it wrong. Just predicting, hey, the 4-year cycle says November, so I'm going to sell everything in November. But yeah, you're better off relying on the data. So we're going to talk about all that.
Fantastic, mate. Well, good luck with all that, and we'll catch up again soon. Cheers, guys.
Thanks, mate. Cheers.